Hello, my name's Ethan. Make sure to check out my website, ethanwrenn.com, from there you can find links to all my various socials. We are currently live, and you could be here asking me questions, what symbols you would like me to cover, so make sure to follow or subscribe if you'd like to get notified when we do that. I also have a website. On my website, I have a blog. Make sure you are reading the articles on my blog. It provides in-depth information for a lot of the products that we cover. And I also have a shop where I can sell shirts, hats, and I'd highly recommend, if you were to be interested in any of that, at least check it out. Here's an example of my website. You come to my website, click the blog at the top, and choose an article of your choosing. And as you can see, it's a lot of information about the product, about its top holdings, and every single article on my website pretty much has its own unique video that to coincide with it that you can watch. So I'd highly recommend potentially checking it out. Leave a comment. Let me know what you think. I'd really appreciate it, guys. All right. So the next product we are going to be looking at is symbol ARE. I love this symbol personally, and now I'm going to tell you why. So symbol ARE, this is the Alexandria Real Estate Equities Inc. So this is a real estate company. They represent a large holdings of real estate. This is one way of gaining exposure to the real estate market. As you can see, there's kind of been a theme with the stream today. It's been all about real estate, right? We covered symbol XLRE, which is your real estate sectoral ETF. We've covered DRN, which is a leveraged variant of that real estate sectoral ETF. And then beyond that, personally on my own time, I went through all of the underlyings represented by those two products and picked out my two favorite real estate companies that I wanted to cover here today. And as you can see, Alexandria Real Estate Equities is one of them. So what are some of the things that I like about symbol ARE? Well, something we cover here on with everything we do, we always look at the RSI. When the RSI is low, nearing that 30, that's typically a sign that it's oversold or potentially a good value. When the RSI is high in the sky, banging its head against a 70, this is typically a sign that the asset is overvalued or potentially it's just not a good time to be allocating into that asset, right? Typically I go through and I mark all the times prior where the RSI was as low as it is currently, but that's a pretty easy job here, as you can see. The RSI it very rarely will make a visit to its support, and there tends to be just unfeathered strength shown by this symbol with constant growth. Right up here next to the symbol, you see an M. This means every candle here represents 1 month of time. This is a big time frame here, just between today's date. Again, what I'm showing you dates all the way back to 1998. You guys see that? 1998. So there's a lot of price history shown, and as you can see, this symbol kind of, outside of maybe one or two events, the symbol really does just grow over long periods of time. And that being said, it's quite rare that you see a symbol like this even have a significant pullback like it has over the past year because of that increasing interest rate climate that we had gone through. I touched more on that in the XLRE video. I highly recommend going to watch the XLRE video. We're going to talk about that more in a moment. But as you can see, again, this symbol just tends to grow, and it's quite rare. Again, the RSI just further supports what I'm saying. It's very rare that this symbol even enters into these low RSI price points, right? So we only have these two examples to look at. And as you can see, the RSI is down low, touching that 30, and that's typically a sign that it's oversold or potentially a good value. The time prior where this symbol's RSI was as low as it is was all the way back in 2009, where the RSI came down, it touched that 30, and then proceeded to run as much as 610%, which is phenomenal, 610%. Time prior to that, just going even further back to closer to their initial IPO. If their initial IPO wasn't here, its RSI would probably also be lower, but because it takes time for these indicators to populate, this RSI just kind of looks weird for this first 3-4 years. But as you can see, they've also made a 440% lap prior. So this company isn't a stranger to making multi-100% laps. In fact, it happens quite often. So, what are some of the other things we like about Alexandria Real Estate Equities? Well, as you can see, they have a dividend yield of 4.11%. 4.11% is huge, guys. That's huge. There are not many other companies that will offer you a dividend in the range of that 4 to 4.1% range. That's huge. That is like kind of that's really good. That's really good to say the least. There are not many companies that will offer you a 4.11% dividend, but this is one of them. Under that, annual income statements. This company in 2018 had a profit margin of 43.41%, guys. That is insane. That is insane. That is like some of the best financial reports that are happening in the United States. There are not many companies that can pull a 43% profit margin, right? This company is extremely profitable. It cannot be understated. Saying anything less would be an understatement, but this company is extremely profitable. In 2019, they had a profit margin of 41.79%. Before I even continue, look at this blue line. These blue lines on this bar graph chart represent the revenue. And as you can see, the revenue has been increasing year over year without fail. You've had an increase in revenue. So in 2021, they had a profit margin of 53.59%. Again, with rising revenues, 53% is insane. Those are great financials. Those are some of the best financials you could ask for of any company in any sector. Phenomenal. In 2021, they had a profit margin of 26.65%, and in 2022 they had a profit margin of 19.83%. Again, nothing to scoff at. And again, you would probably attribute some of this decreased profit margin in 2022 simply to things like rising rates. And again, we covered this in the XLRE video. I highly recommend watching this, but look at this pullback. As you can see, this pullback is quite rare. This pullback is as severe, if not just as bad, just as bad as 2008. People like to say, oh my God, the 2008 housing crisis. Literally the year that we just went through was just as bad, if not worse than that. And we are now sitting at the bottom of that opportunity, right? Just look at it. The numbers don't lie, right? Pull back, like it is just as bad. That being said, you are now presented with an excellent opportunity to buy a extremely high quality asset, one of the highest quality assets that the market has to offer, at a very competitive price. Because of it, again, kind of starting in 2021, we were at a rate environment that was extremely low, probably like 0.5% to 1%. And this allowed you easy access to money, which made it very easy to potentially be investing in things like apartments or like the commercial side of real estate, or maybe you're leasing out space to a retail store. These are forms of commercial real estate investment, or maybe you're just a personal home buyer. If there's two types of mortgages, there's a floating rate mortgage and then there's a fixed rate mortgages. When rates are low and you're able to lock in a low fixed rate mortgage, again, it makes it easier to invest, right? But throughout all of 2022, the Fed has been consistently increasing rate. Again, if you come to my Discord, we have a channel on the side for economic data, and these automatically get updated with the most current rate information. And as you can see, rates currently 5.5, 6, 6.5, 5 flat. It's a current rate environment. And we're kind of getting this general consensus from the headlines, from just data, from information from the IMF, that we are soon to be expecting a pause in the rising rates, and we're going to be entering either a flat rate environment or potentially a decreasing rate environment. If we look at rates as a cycle, back in the end of 2021, rates would have been like at their lowest, right? But now, after having gone through a rising rate period during 2022, rising rate period causing these pullbacks, we are now kind of entering the top of this rate cycle. And again, headlines, all all outlets would lead you to believe that we are either going to be entering into a period where we are no longer increasing rates here in the United States and we are instead going to be holding flat, or we're going to potentially be going into a period where we're decreasing rates. And it's because of this that you want to start allocating your money into investments that will seek to benefit during a decreasing rate environment, right? Opportunities such as this to be investing in real estate when rates are at the high don't come around often, as you can see. Anyone trying to fearmonger you saying the worst has yet to come clearly just has not looked at the charts at all, right? Because literally, when you compare this to prior historical events, we've already gone through it. You are at the bottom of it. And to say that you aren't is just clear ignorance of like how these things have panned out throughout history, right? But not only that, this blue line right here, as you can see, we are on the monthly time frame. This dark blue line here represents the 180 monthly moving average, and as you can see, it is acting as a support as it has multiple times prior. I've marked it with these green thumbs up. The blue monthly 180 moving average has acted as a support for this symbol over the past 20 years. So that's another technical form of an indicator that this symbol has going for it. And again, I've basically covered everything there is to say technically about this company. Again, RSI monthly, the biggest time frame, the monthly time frame, the monthly RSI is oversold, touching that 30, which is huge bullish indicator. It is currently bouncing off that monthly 180 moving average, right? Another hugely bullish indicator. And then we covered the more fundamental side of it. We said, look, it has an amazing dividend of 4.1%. Look, it's extremely profitable with profit margins in the range of 26 to 53%. Unheard of, with rising revenues every year, year over year. We also then commented on the current rate cycle and how rates are currently at a high, currently peaking, and potentially we're going to be entering into a decreasing rate environment. And a decreasing rate environment for a real estate company means easier access to money, which increased ROIs on your real estate investments. You know, if you have a floating rate mortgage, for example, and you're currently paying in, I'm going to say a random number, 4, 5, 6% range on that mortgage, which is a lot. If rates start to come down, you are going to see that in your monthly payments, like instantaneously. Instantaneously, you're going to be just paying less on your mortgages, which again comes back into higher profit margins. Again, we saw this tiny dip here for 2022. If a worst case scenario for symbol ARE is 20%, a declining interest rate in the market, again, would shoot these profit margins all the way back up as high as 40 to 50%. And again, you're going to be riding those positive earnings reports if you're in an investment like this. So I see a lot of value in the real estate sector of the U.S. economy moving forward as rates peak. So that's pretty much everything I have to say about symbol ARE, other than our current projection for this symbol is a gain of as much as 130%, which would bring the price point on symbol ARE to as high as $253 per share. That's everything. I like this company a lot. Highly recommend them. We covered them technically, fundamentally. Great. Also, they have a $20 billion market cap, so pretty fairly valued, to say the least. Okay, we're going to move into the next investment.